Hi everybody and welcome to Serene Education with the 4 Majors Notes update for the 14th of November 2012. Hi guys, hope you had a fantastic weekend. Sorry I wasn't available yesterday, I was just doing some mentorship. What's been happening? Let's have a look. So what happened on last week? Nice bearish engulfing candle here on the euro, taking us below. If I've just taken the low here in July to the current high, you can see my February tracement level. You can see the 38.2 was breached last week, and this week we've seen a bit of movement to the downside. However, yesterday in particular, we've seen price pulling back to the underside now of 12,750. So 12,750 would be our resistance level, apologies, to the upside. And we want to see, if this is to remain negative, we want to see this 12,750 now on our daily and 4-hour, etc., being our intraday resistance level. You can see on our daily, as I move into this, you can see quite clearly that the histogram has, or the template strategy, CTC template strategy, has gone red across the board, red arrow, red candle, and the histogram on our side has gone red. And we're also trading below all the moving averages near term, okay, which is great, which is what we want to see. So the one thing we got to see though is we've seen 2 consecutive days now of indecision. Yesterday's candle, a lot of movement. However, you can see price closing quite close to the open, therefore giving us this shooting star or doji pattern at the underside of a prior breakout area here at the 1275. So it's imperative that to see price reverting or to continue her trend to the downside, we do need to see 1275 being her resistance area. She's actually pulled back now in the Asian session back to 1275. She now has to remain under 1275 in order for her to still look negative long term. We can still see how we have lower swings on my 4-hour chart, depicting that we are still in a downside trend. All the moving averages by price, which constitutes bar the 20-period moving average. We have our institution and our 50-period moving average. Histogram is very much red across the board, and the only thing that's giving us the problem at the moment now is we have a blue arrow and the candles are red. So we have a inconsistency here with the 4 requirements of the template, and we are seeing a pullback. This pullback has happened or occurred this morning yesterday at 1 o'clock in the afternoon. We had this morning star formation after this fall, and price is now reverted to the upside. It has to remain below this 12,750 mark or the 1273 or 7450 mark. Very, very important that it does remain so. If it breaks above this, then we should see or could see price reverting to the upside and retargeting the 12,800 mark, which is our institution moving average on our daily time frame. Okay, so it's very important that price. You can see on the hourly chart where prices, it's testing that resistance level here at 12,700, and you can see with the institution moving averages, a lot more red on the histogram than blue. So this is telling us we should be looking for negative sentiment, and you can see that we are in a negative trend. So for this to remain negative, we do need to see this area here that it's testing to remain, to see price finding resistance at this level and for price to revert to the downside. The moment it gets above it, it needs to be trading well above 1276 in order for it to be looking more positive near term. And if that's the case, then we'll target that 12,800 upside. On to sterling. Let's have a look at this one. Very negative week last week. Really falling and dropping below this current, or it was the previous monthly support area here at this psychological round number at 1600. Since then, price has really jammed through, and in doing so, we have our first red arrow on the candle telling us we should be looking for potential trades. On our weekly, looking really negative as we punch through this line. And if you just take the wicks here, you can see quite clearly that the uptrend is still in play. However, you take the bodies, there we go, you can see that the candle has now breached that. What we are doing is we're trading below the 20-period moving average, and you can see that we've had a bit of consolidation. So if we look on our daily charts, there we go. There's a 12,800 mark, which constitutes the institution moving average, and you can see quite clearly price has moved into the institution moving average. Yesterday, we saw price reverting to the upside, and then closing in this spinning top formation, so very indecisive. But you can see we had a slowdown. So a lot of selling into this institution moving average here at 12,800. And you can see quite clearly now that we have the 12,800 below us. We are seeing a consolidation. So if this is to remain negative, we do need to see the 12,800 mark being breached. And if that was to happen or to occur, then we should be targeting the 15,800. I'm getting these areas here, support and resistance lines, primarily just looking at the February tracement areas You can quite clearly see that on here. So price support and resistance level at 1585 or 15800 would be a genuine area or target until we get a break and close lower than 1585. So on our 4 hour, and here we go, 4 hour, 1585 is below us. 15900 is a fib retracement area. The hourly, here we go, 1585 is below us. It does need to get below these areas, guys. 4 hour chart, let's go back to that 4 hour chart. Apologies, just want to put that in. You can see quite clearly we're falling, lower swing, 1600. Consolidate under 1600 for a while, and then this candle over here gave us the indication the price was dropping lower. And now it's consolidating at the underside of 5900. So if it remains below 5900, we should be targeting the 1585. Get below 1585, then we're targeting the 1580, which is that other area, support and resistance, and so forth to the downside. Histogram remains very negative across the board. We are seeing consolidation though. You can see the lows are starting to get higher. The last 4 hours in particular, we've seen an upswing, and you can see we've swing high. However, you see we've got a consolidation here at 5900, and the 20-period moving average is in play as we speak. So it's imperative that 5900, if this is to be negative, needs to see a bearish engulfing candle here. We do need to see price remaining below 5900. If it gets above 5900, then we should be targeting the upside. And the upside, we should be back to this consolidated range here that we saw at 1596. So this little consolidation here, there's room for movement here if and when we get a nice bullish engulfing candle above 1590. So be patient, wait for that confirmation signal on these time frames, and then trade that. US dollar Swiss franc, let's have a look at this one. Weekly, we've seen a break to the upside. Last week, nice bullish engulfing candle above this consolidated range after price fell from these highs here that we've seen at the 1000 over the past couple of months. It's had to remain above this area here at the 940 in order to be positive, and you can see near term we are starting to see that. So if we go to our daily, we want to see this consolidated range. There we go. Price was trading this consolidated range for a good 2.5 months, and now we've hit a breakout, and prices move towards our fib retracement pullback of the broken the 23.6 here in the near term, which was the institution moving average as a major support and resistance level, and now it's headed towards that. Once it's broken this area at 23.6, it's headed towards the 38.2, and sure enough, got into this the past couple of days. A lot of spinning tops as we head into this 915. You can see a genuine pullback. This candle over here, a lot of negativity because it's closed lower, or indecisive negativity because it's closed at the lower end of the wick at a resistance level. So we're seeing a slight drop to the downside. It's imperative this is to be positive. It needs to get above 950 as soon as possible. Otherwise, we're going to see a further pullback in price. If we take a fib retracement from the lows here to the current high, you can see that the 940, which is the 23.6, would be our first target, and the break with that would be the 38.2, which would take us back towards that 940 mark. So imperative that it stays above 940 intraday. So make a note of that. 940 intraday to find support, to see price reattempting 950 soon. If a break below 945 happens, then we should be targeting back towards the 38.2 mark, which would take us back towards that resistance level intraday. So make a note of that. 945, there we go. My 4 hour. This is my 4 hour chart. 945. There we go. So prior support and resistance levels on this breakout. You can see prices trading into that right now. If it fails to actually find support here and it breaks lower, then we should be targeting the 940, which happens to be that major resistance level in the past. So very, very important. Histogram is remaining blue, so it's telling we should be looking for intraday sentiment to the upside. So look at the hourly. It's my hourly entry candle. You can see the institution, where the institution moving average is now in real term compared to where it is on the hourly. The institution is now acting as potential support at that 945. So we could see price now bouncing to the upside and targeting that 950, 951 mark, which happens to be our current high intraday. So very, very important. If it fails and closes lower than the institution, then we should be targeting the 940. And our 940 is our major resistance level or support level that we know of on our daily. So you can see quite clearly I have two targets. Bullish engulfing, 951 target. Bearish engulfing, 940 target. It's that simple. Last pair of the day is US dollar Japanese yen. Let's have a look at this pair. What have we had? Well, what have we got? Very indecisive. We've had movement to the upside since September. Nice bounce on the 78 in the weekly. You can quite clearly see the longer we went sideways, more likely price is going to build on that. And sure enough, price reverted to the upside. And our first target would have been the 80. price support and resistance level at this area. And sure enough, price slammed into it, then broke higher, and they were expecting price to actually find support above it and then move to the upside towards the 8400. That failed to materialize, as last week we saw the bearish engulfing candle and it took us back below this area. However, from these lows here this week, we've seen price reverting to the upside and now trading into that major support and resistance level. So what we'll be looking for on our daily is to see that confluence, and you can see quite clearly a lot of indecisiveness here, poking its head up above the 80, breaking up above here last week, but failing to hold on to this. We had a pullback, and we wanted to see price pulling back and now supported here above the 80. That failed to materialize, as on the 8th, we saw price reverting to the downside. In doing so, trading below all the moving, well, the shorter term, the institution, the most important one, plus the shorter term moving average in the shape of the 20-period moving average, but also slamming into a price support and resistance level here at the 79.50 mark. Then going into this very tight consolidated range. 3 consecutive indecisive days, 2 spinning tops, spinning tops and engulfing, but a very large spinning top, very indecisive, wick on either side, and we wanted to see a decision. And sure enough, the decision has been this morning. Wow, huge candle on the Asian session this morning, as prices major move to the upside to retarget the 80. Okay, so histogram remains blue. It's telling us we should still be looking for positive sentiment on this one. Very itchy and scratchy, to be honest with you. If you look at the uptrend at the moment now, if you take the bodies, you can see prices trading well all over the place. In conjunction, if you take the wicks, however, you can see quite clearly that prices found supported at this level on the way up. If this is to remain positive, histogram wise, if this is telling us we should be looking for positive, we do need to get above the 80 as soon as possible. Failure to get above 80 is telling us that there's no conviction in this upside move. And you can see quite clearly we've been above it already. Why did we fail? I mean, you can quite clearly see price moved above here. It's surprising that price didn't actually find support above here and kick on. That's the only concerning factor with the US dollar Japanese yen. It's done all this work to get up here, and then it doesn't really want to be up here, which doesn't really bode well for sentiment. So it's imperative this is to be genuine. It needs to get above here and find support and then kick on. Otherwise, we can see price moving into the underside of 80, finding resistance, and what was price support will become the new resistance again, and then price will revert to the downside. So it's very, very important to be patient with this one. Rather give this back to the market the remainder of this week. Rather get a confirmed direction for this pair. Very, very, very important that we do get that. Otherwise, we'll just be trading. We'll be just be trading speculation or blind, is the way I like to talk, and we don't want to be doing that. So 4 hour, we are bouncing on. You can see quite clearly that price actually found support at the institution and moved higher. It's imperative that, as I mentioned, this to be genuine sentiment, we need to get above here as soon as possible. Otherwise, we could be going in for a major resistance level here, and as long as the 80 is above price, then that will remain as near-term resistance. So no trade for me until we get above that, and we find support above that, and we're happy above that, and then we can kick on to these highs that we had, what we've seen recently here at the 80.60 for the starters. That's it for today, guys. I hope you have a fantastic trading day. Please be aware there is news out today. This morning we have unemployment rates for the GDP. We have Claremont count change, 9:30 a.m. GMT. We have all that. Then we go into the European industrial production month-to-month figures at 10 a.m. GMT. Then we have the Italian 10-year bond auction, which is a tentative announcement, but it's quite important to see what the Italians are getting for their 10-year bonds. Then we go into 10:30 this morning. We have the Bank of England Governor Merv King speaking. We also have the BOE inflation report at the same time, so it's going to be interesting to see how that inflation report comes out. Very, very important. Then into this afternoon with the US data, core retail sales month-to-month figures, the PPI month-to-month, which is a very important one. We've got to see what the change of finished goods and services sold to producers. That's impacts CPI data. Also leads into, well, all this leads into inflation. So very, very important. Retail sales month-to-month figures as well. Then we have FOMC minute meeting. This is another one that's relating to interest rates announcements. So these guys, FOMC, are pretty much, a lot of people gauge what they have to say to see if it actually makes any changes for future interest rates changes. So very, very important, guys. Make sure you factor that all into your trading today and keep it simple. Okay, follow the rules of the strategy templates, back it up with sound money management, and you cannot go wrong. Okay, it's very, very important. Keep it as simple as possible. Otherwise, Have a fantastic day, and I'll see you first thing tomorrow morning. Until then, trade serenely.